morning, it's Sharon Yeary with Sharcom Realty. And today we're going to talk about your credit and why you need it. Let's start now. What is credit? What are the scores and why do you need credit? Credit is borrowing money to purchase things now and then paying for them later. You will pay a fee to borrow money, more than likely, and it's called interest. Credit scores range from 300 up to 850. Most people don't have the cash to buy a car or a home, so they borrow money. Depending on your credit score will determine how much money you get, what interest rate you will pay. Even if you pay cash for something, sometimes it's hard to get a loan or borrow money since you have no credit history. Common factors can affect all your credit scores, and these are often split into 5 categories. Payment history. Making on-time payments on your credit accounts can help your scores. But missing payments, or having an account sent to collections, or filing bankruptcy, those could reduce your credit scores and hurt your borrowing power. Credit usage. How many accounts do you have? How many have balances? How much you owe and the portion of your credit limit that you're using on revolving accounts all come to play here. Length of credit history. This category includes the average age of all your credit accounts, along with the age of your oldest and newest accounts. Types of accounts are also called credit mix. This considers whether you're managing both installment accounts, such as a car loan, personal loan, or mortgage, and revolving accounts such as credit cards and other types of credit lines. Showing that you can manage both types of accounts responsibly generally helps your scores. Having good credit can make achieving your financial and personal goals easier. It could be the difference between qualifying or being denied for an important loan, such as a home mortgage or a car loan. And it can directly impact how much you'll have to pay in interest or fees if you're approved. Here's how to get a good credit score. 1, pay your bills on time. Pay them when they're due, even if it's just a minimum amount. Don't borrow more than you can pay off easily. Don't apply for several different accounts in a short period of time. These hits on your credit can lower your credit score. Only apply credit when you need it. With that said, if you pay cash for everything, you still might have a hard time getting a loan because you have no credit history. Lenders look for the type of credit you have. Have you made payments on time? Your credit history, etc. Your credit score can change for many reasons, and it's not uncommon for scores to go up or down throughout the month as the credit companies receive new information and it gets added to your credit reports. You may be able to point to a specific event that leads to a score change. For example, a late payment or a new collection account will likely lower your credit score. Conversely, paying down a high credit card balance and lowering your utilization rate may increase your score. But sometimes actions might have an impact on your credit scores that you didn't expect. Paying off a loan, for example, might lead to a drop in your score, even though it's a positive action in terms of responsible money management. This could be because it was the only open installment account you had on your credit report, or the only loan with a low balance. After paying off the loan, you may be left without a mix of open installment and revolving accounts, or with only a high balance loan. Perhaps you decide to stop using your credit cards after paying off the balances. Avoiding debt is a great idea, but lack of activity in your accounts could lead to a lower score. You may want to use a card for small monthly subscriptions and purchases, then pay them off in full each month. To maintain your credit account's activity and build its on-time payment history. And that's it for today. I hope you got something out of this and learned something as well. This is Sharon Yeary with Sharcom Realty. Don't forget to stay safe, stay happy, and smile.